Good afternoon. This is the video newsletter for Buy Sell Short for Sunday, December 19th. Today we're going to start off with the SMH, best looking of the indice charts. And as you can see on the SMH, we continue to ride that 20-day exponential higher, and we still have that rising wedge that's been in place from the September lows. The only concern on the SMH, and something we're going to keep an eye on for confirmation of a continued breakout, is the volume. You can see here over the last month or so, volume has continued to get lower and lower every single day on the SMH. And this past week, we saw two of the lowest volume days on the SMH all year, I believe. We have a nice setup on the SMH right now, and what we need to confirm the next move higher would be a nice spike in volume on the SMH over 10 plus million. We get a volume spike over 10 million shares and an upward move, and things will be looking very, very good for the SMH going into year end. Looking at the Dow 15-minute chart, you can see we continue to ride that 200-day moving average in the 15-minute time frame. We look a little bit overbought, not really a surprise. You get the same sort of picture on the daily chart. Remember, Friday was options expiration, so we saw, that sort of throws a little quirk in how the large caps trade. And typically as well this time of the year, the small and mid cap stocks end up actually outperforming. And what we're seeing on the markets over the last couple of weeks has actually been fantastic for us. We have no real big breakouts, but sort of choppiness in a pretty tight range with an upward bias. And that is just fantastic if you're trading small cap stocks like we are. One little concern to keep an eye on, of course, is the US dollar. This has been determining where the market has gone all year long, and the level we'll be watching on the US dollar is if they're able to break that 200-day moving average up there around the 82 level. Funny enough, it seems every time we have a Fed meeting, no matter what the Fed says that's anti-dollar, the dollar actually pops. And if we take a closer look at the chart, you can see here, since the Fed meeting, we've been bouncing higher. We really like to see the US dollar break below the 20-day exponential this week, and we could be set up for a nice little run into January. Keep in mind that this week is a holiday shortened week. The market is closed on Friday. No half day this year. Market is closed for the full day on Friday, Christmas Eve. So keep that in mind as you plan your trades. Let's jump into check out some of our stock plays right now. PRKR, very nice mover for us over the last few days. It closed at 46 on Friday, but that close is bullshit. Like a lot of closes we saw right on the bell, PRKR was actually trading at 49 cents, and then somehow they were able to sneak a 46-cent closing trade in just to paint the tape. Usually when you see that kind of action, and we saw a lot of it on Friday on a lot of stocks, that painting action, which is funny, it happened on stocks that actually have no options. But whenever you see action like that in small caps, typically what we see the next day is a pop and gap on a lot of these plays that got shaken out. But the chart looks really, really good here. We broke up above that 50-day moving average, and we're looking like we're going to do that on the close on Friday. A close at 50 cents. Next target would be a move up to 70 cents next month. And of course, if we get the news that we expect, this is definitely a stock that can do very well going into January. NEI. This is a stock that we've been very, very patient with, and it looks like we put in a nice little bottom there on Thursday. I know some of the guys in the room were getting really anxious on this one when it was trading $1.45, but we've been through this, what? 1, 2, 3, 4 times on NEI since September, which is actually great in my opinion. We've got a nice little trading range on this one. As you can see on the chart, the downtrend line breakout is 156, 157, but ideally a close above $1.60, and 180 and 210 is what we'll be looking for. And I continue to mention that EGHT is a perfect example of what we're looking for on NEI. Let's take a 1-year chart on 8, which we played very successfully during the year. As you can see here, for about 6 or so months, EGHT had this nice little trading range, which we traded quite successfully, and then finally went on that big breakout when most people didn't expect it. And this stock also had a volume issue, and then when it started its big breakout, volume really started exploding over 1 million shares. So that is what we're going to be looking for to happen on NEI, and I think it's going to happen pretty soon here. We're going to see a volume spike like we saw back in late October and November, and then it'll be off to the races for that 200-day moving average test. Stochastics looks like we're putting in a higher low. We got a positive ADX cross, so the chart looks really, really good, especially on some continuation early this week. Drugstore.com, DSCM, has just been a monster for us. We got that fat little break on 2, and as you can see, the rule of 2 continues to work perfectly. Not only did we have DSCM do it, before I took off on Friday, I mentioned in the chat room that to buy CBRX on that break of 2 with a 215, 220 target, hit it on the nose right on the close. Same thing with DSCM. We're looking for a lot more on this chart because it's got a lot of upside. And if we get a breakthrough 220 on DSCM tomorrow, we really could see this one test the 260 level this week, even though it's a holiday shortened week. The volume that's been coming into this stock over the last couple of weeks tells us some serious funds and buying is coming in, and the indicators just look great. We've got a nice upward, very bullish ADX trend, stochastics, and then of course on balance volume just tells a tale. Look at that explosion higher in unbalanced volume. This indicator, for those of you who are new, tells you whether accumulation or distribution is going on in the stock. It's going up, which means people are buying the crap out of this stock, and that is very, very bullish for the near term. Biotech stocks have been doing very well right now, especially penny biotech stocks. CXM, this is one of our little plays here. Got a breakthrough on 50. We closed right at that level on Friday. We're looking for a move to 54 and then 60 cents. We had RSI break up through the 50 level. Positive MACD cross coinciding with a volume spike. ADX is really starting to explode, and as you can see, stochastics breaking up through the 50 level. We're about to get money flow going positive. All indicators look really, really good for this one, and if it does have any tax loss dips, I would definitely be considering adding any dips that happen down and below the 20-day exponential there at 45 cents. BNXbanks.com. Actually, let me go to a shorter view on this one. Very, very nice volume on this one early on Friday. We continue to hold that 20-day exponential since the big breakout last week, and this one looks really, really good. All the indicators look very solid here, and if we go back to that 1-year view, every time in the past year we've seen volume, actually let me lower the chart here, that we've seen volume explode on BNX, especially when we did the same thing back in December and January. This stock has gone up 50% on average, 50 to 100% each time volume has come into the stock. Last December, it doubled, did the same thing in March, did the same thing in April, and as you can see right now, we're getting a volume spike on this one, and if we look for a double, you know, just from that 17-cent area, we're looking for a move up there to that 35 resistance. This stock, you know, you'll ask, why did it sell off in November? It always sells off in its November's earnings report because like a lot of other tax-related stocks, it's a slow time of the year. Their busy time kicks in right now, and that's why you see that anticipation building and buyers start coming back into the stock. BLDP. Let's actually take a look at two of its peers, FCEL, over the last week. Remember, we bought this one a couple of weeks ago at $1.22. It hit almost $2 on Friday. What is that? 80-cent gain, 75% gain in 2 weeks from our call. But check out that move on FCEL. Then we also have ACPW. This is another peer that has continued to break higher. You recall, this is a stock that we bought on that $2 break there in November. And look, it's up another 30+% from that call. But two of its peers are very, very big over the last couple of weeks. And here we have BLDP sitting down here at the lows. One thing to actually keep an eye on here, check out the green and red volume bars. Up days, the volume is heavier. Down days, the volume is lower. Classic accumulation sign. Breakout here is a close above the 20-day exponential 145. I would actually, if they did shake this stock, I would definitely be looking to add more because this is a classic January popper setup. You can see the November sell-off, bottoming action, and this is a stock I really can see this one trading back up to its typical trading range level that it had for the last several months, up there at the 165, 180 level. And actually, let's take a look. Here is the 1-year chart. Look at the performance on BLTP back in November into December of last year. Plunged from 248 all the way down to 167. And look where we find ourselves back in early January. All the way back up at 250. Recovered the entire gain, which is why we're looking for a repeat here again. I think this is a classic January popper stock setup here. BCON, Beacon Power, alternative energy stock. We've got a nice little flag chart here. Got the breakout at 25 cents. We're looking for possibly a move up there to the 200-day moving average. RSI has been flatlined throughout the flag and is now moving up. We're seeing volume come in to confirm, and also what I love to see is a stock break 50 on stochastics, come back down, and then bounce again. So looking very, very good. Another beaten down penny stock that could do very well over the next couple of weeks in this market. Now, one of my favorite penny under dollar setups for January popper is GNVC. They've got cash, no delisting risk, no financing risk as I see it. Very nice sell-off in the month of November. Nice bottoming action. Volume starting to come in. A break of 50, and this is a stock that really, over the next month, can easily see a move back up to its previous highs at the 60s. And actually, I just did a really quick test. This is a exact same setup as WEST. This is another fantastic January popper setup. Over the last 3 years, GNVC from now through the middle of January has put on some monster moves. Last year, it doubled, going from 93 cents to $1.80 plus. The year before, it did the same thing. Went from 40 cents to 80 cents the first week in January, and the previous year before that it went from $1.40 to $1.90, so a 30% gain. We're looking for the same here. Any dips 48 cents and under, consider adding. Stops, as you can see on the chart, 45 cents, but a great January popper set-off. And just like WEST, we're playing its cyclical trend / habit of popping this time 3 years in a row. So let's see if we can go for 4 in a row, just like WEST. NCZ, quick mention on this one. As it's been stair-stepping, right now we're on the down leg of the stair-step. Again, its close on Friday, BS. It was at 99 cents. Somehow they closed it at 96 cents. Usually, like I said, when we see that, we see a gap again. So we're going to continue to see that stair step move higher, and stops / support 90 cents on this one. So going into this holiday shortened week, we've got some very, very nice setups. GNVC, BNX, PRKR. Love the setup in BLDP and just the trends that we have there. And we've got some more January popper plays that'll be coming this week. So keep an eye on your emails. Any questions, just shoot me an email or hit me up in the chat room tomorrow. And that's it for the video. See you guys later. Goodbye.